Hey, listen, I get it. The rates are high, right? High compared to what, though, right? I'm Realtor Bert Tutte, and the topic of this video is to buy or not to buy, right? So let me tell you my take on this real quick because this is a very important concept that we have to understand. Now, the higher the rate goes, the interest rate, then the lower the house price goes. This was the Fed's objective all along. Their objective was to have a soft landing. It's gonna. I mean, it's actually, one could argue that there is actually a recession in the housing market. So a lot of the gurus in our industry are talking about that. So they wanted for us to pay more for houses in the interest rates so that house prices would come down because they thought they'd gotten too inflated during the pandemic years. And they're right. Well, that's what's happening right now. Here we are at the end of February 2024. Not even the end of the first quarter yet. But what the Fed, the Federal Open Market Committee, what the Fed wanted was for the housing market to slow down so that those home prices that were inflated would come down. That's exactly what's happening, right? We're starting to see in San Antonio, where I'm at, we're starting to see house prices going from here coming down just a bit. Elevated days on market, more months of inventory, right? 69 to 72 days on market on the average over the last 2-3 months, because I track these numbers very closely. That's usually a little bit of a percentage year over year from the last year, up a little bit. Same thing with months of inventory. We've talked about this in other videos. 4.2 months of inventory in San Antonio. That's theoretically, if not another house gets listed for sale in San Antonio, it would take 4.2 months for all of the inventory to be sold. Theoretically, it's not how it works, obviously, because it's all driven by supply and demand. And some houses there's no demand for, right? And it can only be fixed through price, right? Because price fixes everything, right? So my point to tell you this is that if the rates are high or higher right now than what they were before, like during the pandemic years, of course they were, because those interest rates weren't around in the history of forever. They've never been that cheap. I refied at 2.375 or something. You don't ever see that. They were artificially low. And I don't know if we'll ever see that. I don't know. Will we see 4 again? Maybe. I don't know. Who knows? Anybody who says that, the people on social media say, yeah, well, they're going to come down to the 3s again, and nobody knows. I don't think so, but that's just my opinion. But even 5s is better than 7.18%, right? Which is, the last time I checked, it was right about 7.18, 7.25. Still better than the historical averages. Because remember, I've talked about in other videos, going back to 1971, I did a study, and the average interest rate for a 30-year fixed is 7.65%. We're still below that. So we're still below historical averages. So that's why I said, compared to what? Rates are high, but compared to what? What gets me is when people say, well, I'm just going to wait for house prices to come down and for rates to come down. Then I'm going to jump into the buyer's market again, right? I'm going to sell my house. But it doesn't work that way, folks. It does not work that way. You can't have your cake and eat it too in economics. It's simple supply and demand. Okay? As the interest rate goes up, the number of houses sitting, the demand goes up, and the supply of houses goes up, right? Why? Because the interest rates are high. There are fewer people buying. But when those rates do come down, we're going to see an exorbitant amount of people that have been waiting for that rate to come down to jump back into the market, and now there's going to be higher demand for houses again. And guess what? Multiple offers, that's right. Yeah, bidding wars all over again, just like we saw during the pandemic. But here's what I wanted to tell you about that, is that when rates come down, house prices or house values will go up again. And when that happens, you're going to have to pay more for a house, not only because of the demand, but also because of the multiple offers, but also because you have to outbid. Because it's a competition. Whether you're buying a home, selling a home, or investing in real estate, it's always a competition. So you have to ask yourself, how am I going to win that competition? Well, if it's anything like, a couple of years ago, it's going to be, to the tune of 30, 40, 60,000 above asking price. Here's the thought. Instead of competing against other buyers and overpaying for the house and your 60,000 going to the homeowner, why not instead buy a house now where the homeowners need you? They're desperate for you. Let's go score a good deal for you now. Okay, 7% interest rate. Okay. Can we get maybe some closing costs, contributions in paragraph 12 of our Texas 1 to 4 family on pre-owned homes? Can we resell? Can we negotiate maybe some closing costs that can help to contribute to buying down the rate? I don't know. So maybe it's not 7%. Maybe it's a little 6.5%. I don't know. Whatever. We can talk about that. Let's have a discussion around that. Phone numbers listed above. It's basically 210-376-TALK. Right. Just remember 376-TALK, 8255. So let's have a discussion around that, because guess what? If the rates do come down, again, the house prices and overpricing of houses is going to ensue all over again. Wouldn't you rather that $60K you're going to have to pay to outbid everybody to get into the house? Isn't it better to use that $60K to buy down your rate? You could even do that. Instead of and not even that much, you don't have to spend that much. Instead of overpaying for the house and giving it to the homeowner, why don't you take that 10,000, 20, 30, 60,000, whatever, and buy down the rate? And even ask for some closing costs, right? That I just mentioned. But listen, this is the time. There's less competition. Right now is the time to make that purchase. If you're thinking about making a move, if you have contemplated because you've outgrown your space, there's been a birth, there's been a death, you have to downsize, whatever that is, right? Job loss, job transfer, job promotion, all the things that typically cause us to sell and to buy, right? Why don't we do that and buy now? I've been telling you for probably 6 months now, 4 to 6 months, date the rate and marry the house. So if you're already in the house, when rates do come down, which we expect that they should, we think, maybe not like they predicted. At the beginning of the year, they're predicting, or the end of last year in 23, they were saying, okay, well, by the second quarter, rates are going to come down, or the third quarter, they're going to come down. Now we don't know. But when they do come down, and we suspect they will, when the Fed is, adequately, satisfied with where we are in the housing market, and they think that they got the values under control. Remember, they don't set that mortgage rates. However, it's more driven by the 10-year Treasury yield, the bond yield, right? As well as the overnight funds rate. It's in lockstep. Okay, that's what they really raise and lower. It's been static. Hasn't changed the last few times that they've met. They're going to meet again in March, and let's see what happens. It's probably going to be unchanged because they're still waiting for this to come, the housing prices to come down even lower, thereby again affecting our industry. And by the way, I'm not just here trying to make a sale. I'm trying to educate you on how it works, and that you can get a much better deal now. And then when the rates do come down, everybody else is fighting over the house. Instead, you're going to be looking to refi, right? Because you're already in the house. You're just going to put a better mortgage on it, right? On the mortgage side of the equation, you could refi, all right? Because putting a better mortgage on it, but you're already in the house, is much better than having to go out into the open market and overpay, because the lower the rate goes, the more you're going to pay. It's a simple fact, right? So if rates were at 15% right now, more than double than they are right now, you're better off, because the home prices are really going to go lower. There's a lot less competition. We don't need for it to go that high, though. I don't think it's going to get to 15%. It's not the 1980s again. But hey, you know, as it is right now, there's not a lot of competition, folks. There's all the numbers I just gave you, right? And how the market's very static in San Antonio. So let's give the sellers what they're looking for, which is a buyer that's achieved RWA status. If you don't know what that is, I've discussed it in other videos, but you can just reach out to me. Again, the phone number is listed above, 210-376-TALK. Give me a call and let's talk about it, because, you know, I think that if you were to put that money that you would otherwise use to overpay for a house and not find anything that you're looking for, then why don't you instead put that toward, anticipate having to do that when the rates do come down, and put that toward a house, buy down of a rate now. Get into a house now, because it's going to be a heck of a lot cheaper when the rates are high, right? Whenever the rates are higher, you can buy the home cheaper. And that's where we're at right now, right? And then the refi is what, 4, 5, 6 grand, as opposed to overpaying 60 grand. Isn't it better to think about how that makes more sense? Overpay later, or pay a little bit more now and refi later. Pay a little bit less now and then refi later with that money you're saving for not having to overpay. But listen, don't wait for the house prices to go down and the rates to go down concurrently, because that just ain't going to happen. That doesn't happen. Because remember, when rates go down, prices are going to go up. Then what's the price of the house going to be, right? Well, I'm Realtor Bert Tade. Thanks for watching my video. Be sure to leave me a comment below. Let me know what you think, right? Where do you think rates are going to be going? But more than anything else, you know, I want for you to reach out to me with any questions you have about real estate. I want to be a resource to you here in San Antonio, and I have colleagues that work all over the country, right, that can help you out. I have a perfect home finder program. If what's out there is not on your agenda and you want something special, we work with a lot of unlisted properties, right, here in San Antonio. We take all your criteria, we send our marketing dollars out into the community to help you find that special property off market. It's almost like a pre-market sale. It's not a deal that we have with the seller. We don't even know who the sellers are, because you haven't told us where you want to live yet. We'll send our marketing dollars out in the community, help you find that special house. We'll negotiate it with the seller. We'll even negotiate that they pay our fee for helping you find that house. As an RWA buyer, right now, the possibilities are limitless. It's amazing. If you're a buyer right now and you can afford a mortgage, let's go find you something that makes sense. Right? I'm Realtor Bert Tade. I'm also a broker owner of Santino Properties LLC, a boutique brokerage that helps buyers and sellers win in this market in San Antonio's competitive marketplace that it can become through the effective and unique use of marketing. Thanks for watching this video. That's it for now.